The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 23rd day of March. My pleasure to be here Monday through Friday, market days, and good to have Steve back and John, and just our lineup is right here. It should be a great day, great information day, and Dow's up 41 at 18,168. It is just 100, almost 100 points away, no, a little more than 100 points away from the all-time high. I believe it's going to make it this week. It's starting to struggle. It's exactly what we wanted to see. We also wanted to see that the IBB, I spoke about that last week, was just about ready to make its final coda move. I believe that it's in the process of doing it. It might not be quite finished, but there isn't all that much left on the upside. It's going to be more like downside that we're looking at, and that's going to impact the QQQ. Remember, that's what we were looking at. So let me run the numbers. The E-mini's up only 450 right now. I shouldn't say only. It's up 450, but it hasn't made a new recovery high. The high was on Friday was 2106.75, so it's gone 25 cents above that to extend leg C. But we are coming up to the left side high, all-time high of 2109.75. And that is what we want to see pierced by 25 cents to get you that leg D, the missing leg D, the requisite leg D in the Chapman wave methodology. And then we're going to see, do we start to pull back at that particular point, or is this now getting close to, and this is going to be the real test, is this going to be close to some kind of a reversal that takes the into, now, you know that March into April, mid-April is supposed to be the strongest period. Are we instead going to see some kind of a pullback here? And then later on in the year, in the summertime, we start to move higher? That's the big, for me, that's the big question. In fact, there's only one question. And the question is, how high is high? And I've spent a tremendous amount of work on this in the last many weeks, but especially over the last 3-4 days. I'm getting closer and closer to some kind of a formulation that I think I will not keep as a template, although we have something that we're using as a template, but as a guidance, something that says, these are the parameters we want to look for, subscribers want to look for, and why we have long positions at this particular time, but we have long positions in some areas that are counter to what was happening before, and we are very close to implementing some shorts. That's the way it is. So let me just run the numbers now, because it's very important that we do this. I'm going to do this quite quickly because it's the beginning of the week. We just want to clarify. The Dow is up 49. It has made 18,197.29 was the high on Friday. Today we've gone slightly higher now. My Chapman wave trend gauge gave an indication that said that by Monday morning we should have seen some kind of early dip before a rally took place. Well, the dip did take place. This applies to the Dow. This is specifically for the Dow. We did that pre-market, but we did not do that post-market, and that's a pity, because what it says is that I have to say that is one of the first times it hasn't worked, that in the morning we start to get it. It could be later in the day, but it is saying that there should be some weakness on Monday. That's basically what it says. Now, here's the other thing. Look, we've already gone peak ABC very quick from 17,620 to today's high of 18,202. That is a very quick buy signal to buy mode unfolding. And that invariably says that when you get to D, you're going to stall a little lower down than what you would normally do. Look at the extension that you went from 17,037 back on the 2nd of February all the way to a D up around about the end of February, up 25th to 18,244. I would say that a 1,200-point rally is a rally going from A to B to C to D. What does that mean, A to B to C to D? It means in the Chapman wave methodology, it's a very simple technique. You look for the lowest, most identifiable low bar, and you merely count each successively higher peak. There's peak A in the E-mini 10 minutes. There's the peak B. There's peak C. And at peak D, other things can happen. You can take time. You can take price. You can take both. Or you can recycle to the upway to continue the buy mode. And so far, we've taken time and price. Okay, just a real. I have them all lined up. I said, you know what? I do it current. I don't have to worry about it. I can always find a peak D as an example. Now, Z in the den says he has. Yes, he's not right. Z in the den. The low on the 11th of March was 16,627, round number. The very next day it went to 17,620.49. The low bar cannot be the high bar except in a Chapman wave instant restart. So that is not leg A to peak B, to peak A. You can't even start your leg A until the very next bar where the high was, the low was 17,629, 9 points higher. So that's the count there. Okay, martial arts, good morning. Does it mean A, market is stronger when it goes to F rather than to D? It means that the market has been stronger. It doesn't tell you whether the turnaround from a D, E, or F is going to be sharp. Other techniques have to tell you. I hope that answers your question. Just type in, rephrase the question if I didn't answer it correctly. But in other words, an F says be really careful because there's a really good chance that you're going to be pulling back and pulling back sharply. A D might not say that, but if you look at the technicals, we've had monster declines from a D. So, simply put, there is no rule that says from a particular peak you should have X amount of a decline. That's all. Remember, this is the simplest technique you could ever find. It merely counts each successive peak and labels it alphabetically with uppercase letters on the way up and lowercase letters on the way down. That's the technique. All the other things that we do are other techniques. I want to keep this one as simple and always have for 20, 30 years. I've kept it as simple as possible. So sometimes a little confusing, but it only remains confusing until the next peak or trough, usually. Now, the 120-minute chart is gone as a recycle. You see, here's a good example. The MACD is very good, and the stochastic's very good in the Dow as a 93%. So the question is this recycling now to leg F, or is this a brand new B? F says, whoa, be careful. B says, woohoo. Next pullback you want to be buying. Or even right here you could be buying because it should go to C and D. Well, that's where your technique of looking at all these other things, you could use Fibonacci, you can use all sorts of things, use volume, I don't care what it is, but you can't just rely on the letters. You have to look at the pattern. You have to look at a bunch of things. As far as I'm concerned, my eye says the Dow is going to try to tackle this week. The Dow is going to try to tackle the 18,288 all-time high. That's the way it looks like. Okay, now let's go on. So the Dow, make it real simple. I think we're going higher. We're in leg C, and the support is at 18,100 to 18,014. That's the whole area, the 9-period exponential moving average. Now let's go to the S&P. SPX. Don't want to take up too much time on this because it's just following up on Friday. Look, you've got leg D now. Now, for Z in the den, this is leg D in the S&P, and it's not only leg D, it's trying to tackle the 2119.59 all-time high that was a peak D doji right there on the 25th of let's just put that in on the 25th. I don't want to have to keep saying it over and over all month. 225. All right, so that's very important. And this actually is the quickest. Look at this recycle. Peak ABCD. When you get an ABCD like that very quickly, you are so close to some kind of reversal. Now, the reversal from a very quick A to B to C to D, remember, this has got nothing to do with A to B equals C to D. That's a different technique altogether, used by many people at TFNN very successfully, but I use it, but it is just yet another technique. It's got nothing to do. This is merely counting each successively higher peak. And now look, same as the Dow, you've got this Chapman wave up channel inside track. And that says a best case basis is that we go above 2119.59 for leg D, but you've got a tremendous amount of resistance this week all the way to 2144. I know Bull would be complaining about another 300 points up in the Dow, or 30 points in the S&P. But what's really important is that there's another trend line that we've got to look at here, and this is what becomes very, very important. See, there's another little trend line right there. Let's just join those. And that says, just expect a modest new high above that, and that could take you to maybe 21, 22, maybe 25. And then you've got to start being really careful to see what's happening with the MACD and stochastic. Now, I have a whole thing that I did years ago on the MACD and the slow stochastic. What happens when they flatten out? There's just a whole bunch of things that go on. But you see that these new highs are not being accompanied in the S&P by the MACD going higher and higher. That is just a warning. It doesn't say, watch out. It just says, heads up, yellow light. Just be a little careful here. That's that. Okay, let's go to the QQQ series. The QQQ series is the power shares, the NDX 100. It's in a gray leg B. It needs to go above 109.42 and 109.43. If it does that, it'll merely be, I'll be using an alternate wave count saying E/whatever it is. Maybe C, I don't know. But look at the weekly chart. It's doing very nicely above the 9-period moving average, but it's coming back to keep testing that 9-period moving average support a lot lately. So we just got to watch it. All right? Very short term, it says that the 120-minute chart and almost all the indices is a little bit overbought. Now let's go to the comp index. The comp index has gone to a new recovery high, and there I've got leg E/D. Isn't that interesting? Could be even A. But I want you to use alternate counts. And either way, it's saying the MACD and stochastic are going to be on watch here because the MACD's pulled back really sharply. It's suggesting that there's internal weakness. The stochastic says there's residual strength. How's this going to play out? Because I've got leg D in the weekly chart. And we always look at D. Remember, that's the one that counts. Now let's go on. We've got gold. Now, I happen to be liking the way gold is acting here. I don't think it's great, but I do think as a counter trend move, this is going to be very interesting. Why? Why? Because there is a break coming up. Oh, there's a break coming up. Let me just run numbers down, and then I can go into them in a little bit more detail. So the gold is up 50 cents at 11.5. High-grade copper is back at 2.77. We've got bonds down 12.30 seconds, and the dollar is down just a tad at 97.11. No,
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Question during the break. Let's see. About JP Morgan. I've got a restart. So the low of October the 2011 at 27.85 starts a huge leg A and it pulls back very sharply. Then there's another little mini A, so there's two A's. And then it goes B, C, D, pulls back, then it goes A, B, C, D. And now we're at peak D. Why you favor one count over the other? No, I'm not sure what you mean. So just I'll put the chart up here, and that's a restart right there, and it goes A again, and then it goes B. Can leg B and leg E? Oh, you're talking about can this over here be an E? No, that's unnecessary. I've got a brand new start right over there, A to B. Now, so right, maybe if you can post the chart with your notations, it'll be better for me. But in the meantime, if JP Morgan breaks above the 63.49 high of the week of the 2nd of January, then I don't have much choice but to count it probably as leg C if this is the continuation. But Let's see. So that's, well, this is a little bit more complex. That could be an F and we're restarting ABC, or it could be the continuation. No, it's not. The low on the week of the 17th of October at 54.26 was taken out. No, it wasn't. 54.27. That is amazing. Okay, so let me make it as simple as possible. At this particular point, JP Morgan has to hold 60.48, the 9-period exponential moving average on a weekly basis. If it closes under 60, it's going to suggest that there's a failure pattern, an arch formation, third arch formation, and you've got to be real careful, as well as in the daily. And even the daily is suggesting that there is an arch formation here, and that there could be a retest of the left side lows, and then we start up again. But that's going to be very important. So, all right, I'll look to see. In the meantime, I think that the XLF is acting pretty nicely here. It's down 3 cents to 24.67. It's holding well, and there's just a chance it's going to have a very quick spike to the upside, and then we've got to be very careful about what happens. And I should just mention that in my opening call, we are long the XLF, along a position. Okay, now let me just continue. So I was talking about golds, GC.G. You've got a very strong leg A. You don't want to see a leg A up failure pattern. That's number one. Number two is that the arches that have been made in the weekly chart suggest that even though there's going to be another rally, there's going to be another test of the lows down at the 1132.30 low of week of 7th of November. But I think that this is worth at least attempting to play to the upside for two reasons. One is, if you look at the dollar, DXY, the dollar index, which is down 81 cents at 97.10, this weekly chart suggests that it's all, I have to keep this as an E/B. The moment there's a close underneath 96, it's 96.22 is the 9 EMA support, that MACD should start to go down, and if it crosses negative, and the stochastic gets down to 85%, I'll put a plus in. I won't put the down arrow. I might have to wait a second week. And I'm just suggesting to you that the dollar still is the lead currency, but it was way overbought. Now it's just overbought. And it needs a little more time, maybe even more than price. And there's that A that I typed in. You remember the Eiffel Tower, uppercase A, straight up, straight down. That's the pattern that we're going to look at, because if the dollar breaks 95 this week or next week, there's just a really good chance that the euro, for the first time, can have more than just a bounce. It could be a rally. Oh, I don't have volume. Let me look at the FXE. The volume missed. If that volume was an explosive volume down at the low of the 13th, I would have said we could have 28 days or more, 28 to 32 days of a rally before it retests the low. I can't say that right now. I can just say 108.98 on the FXE is going to be really important. It's at 107.25. What is the FXE? It's the currency shares Euro Trust. Okay, let's continue now. We've got high-grade copper, HG, very strong move. This is a very impressive move. Now, I've been talking about, we've got a break coming up, possibly being in about the third week or so of some kind of a mini recession. I'll talk about that when we get back. Dow's down 45, S&P's up 45, S&P's up 3. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're looking at the different indices. I'm just going to grab the EEM here, which is the Emerging Market Index. It's having a bounce, but it's got that M-shaped pattern. So, yep, it's at 40.03. 41.10 is really going to be the... I would have to say that closing above 41.10 would suggest that this second arch is going to be a little bit higher, but it has to even get there, and I'm not sure it's going to be able to do that. So right now it's at 40.03. I think that the 40.80 area is very strong resistance. Let's see what happens if it can get there. Now, holding on to the the pattern that we were looking at. If high-grade copper, now if I'm correct in suggesting, and this is really, I mean, I'm not an economist, I'm just doing it on the empiric stuff that I've stored in my head. I haven't written it down or anything over the period of the last 2.5 months, but I am thinking very seriously that there is some kind of a mini recession that has begun, and that we will only find out about it in a while, because it's always a delayed. It's a delayed instrument, in that you have to wait for the data, collect the data, then impart that that material whatever the price is to, I guess, to the various sectors of the economic spectrum. And then once these people get it, then they disseminate it. So it takes a little time. And it's a look-back period because it's not looking forward, it's looking backwards. It's stating what information came in. Usually it's delayed information. So I don't know. That's just my thinking right now. And you know, my side here is that I think this is just culminating a move that is going to take in a pretty decent pullback. And that pullback will be the pullback that we see like a sieve, which stocks are going to hold up and which aren't. And in this particular period, you'll be able to start to choose what you want for the next big move in the market. And I always have to chuckle because back in the 1999 period, I raised my target on the Dow, even though I got a pretty major Dow signal in January, on January the 14th, I think it was, of 2000. I'd raised my I had up until then raised my long-term target from the 17,000 to the 19,000, even higher area, not realizing that all the money, just every single penny practically, went into the NASDAQ type stocks. That took away. Instead of the Dow making that huge move up, the NASDAQ did it. Now I think we've got this 15-year delay, and this is the period that the Dow can really have a big move to the upside. I think that this particular move, if I'm correct about this being in the Chapman wave, a potential alternate count, look like this right here, alternate count F/B in the monthly, and probably not F, but more likely a B, still going to a C, D, and then maybe E and F over a period of a year or so, or 8 months or so. Then what we're looking at is a rotation through sectors that are very overbought, and then the underbought sectors will start to move higher. And that's what I've tried for my subscribers, to try to identify where we are, what we're doing, and how we just kind of, I wouldn't say biding our time right now, because all the stocks that we have on the long side are up. But we are looking at it very selectively, and I'm preferably going for lower priced stocks at this particular point. I don't mind on the indices going for the bigger prices, or for stocks that I think are really vulnerable. But at this particular point, I'm trying to keep it as light as possible while we try to ride the upside combination, and then we'll see what happens to the downside. And I think the downside is coming, even though the consensus is that we go higher into April, or maybe even early May. So with that said, let me go back. I looked at the dollar, looked at the euro. The euro had this move up. Now, what was very important, instead of making that single leg A failure, you held for 3 days. You've held very nicely. You held support, and then, whoops. Excuse me. A little sneeze there. And then you start to move higher above the 9-period moving average, which is starting to make the positive divergence in the higher lows that are being made in the stochastic, and the lower price in the euro currency pair. Thank you. To make it viable means that it needs to, at 1.089, it needs very much to close above 1.1. 1.107 is the 9-period moving average. It must get above there by Friday, this coming Friday. And then the monthly chart will at least have a chance to have a pretty decent bounce, making an H pattern, lowercase h, because I think there's going to be a retest as the dollar gets jigged or rigged to start moving back up again. But the dollar needs a break, and it's getting that break. So now let's see, what have I missed? I've missed the most important thing right now, and that is the TLT. Why is it the most important? Because it has refused to back down, even though the market has been moving higher. So the TLT at this point has had that beautiful island reversal from the 122.97 March 3rd. Just guessing here. March the 6th. I better put that in because I keep using it, so I may as well know what it is. Edit. So this is 3, 6. from the low at 122.97, and today's high is already 131.75, I believe, yeah. And we're trading 131.29, and I drew in the arch formation. I still think it's going to be more like an arch formation, at least for now. And I also want to say that what's happening in the world economies and what's happening in the United States, it's becoming much more complex because you've got I have a friend who goes to Europe a lot on business, and he's been telling me for a while that Germany is just knocking the socks off everything. I mean, everywhere you go, restaurants, whatever it is, it's just hustling and bustling. And I'm beginning to think that the German economy, which in a sense a little bit resembles what we're doing here, because definitely for profits, we American companies are doing very well. And the rest of Europe has been in a funk. And I think that is the correlation that we've got to look at, that you can make it complex, and it is very complex, or you can make it simple. And what the simple part says is that the companies that are actually selling and producing and getting the results by profits seem to be doing better. The stock markets are doing better. And the other ones are kind of faltering. And then there's been this sudden burst. And that's saying to me that the competition for lower yields, this is what makes it so interesting. In 1929, General Motors bought a company in Belgium. And when people say, oh, we've never been this tied into all the other countries. Yeah, you were. At every major top, we've been very tied into all the other countries. But what's a little different about this particular time is that there's been a commoditization of commodities. In other words, commodities themselves have been pushed down, and the commoditization of yields has forced lower yields across the board. Well, almost across the board. Not every single country, but most countries of the world. Certainly most of the major economic countries. Well, if that's the case, what can the Fed do? The Fed's kind of stuck. They might want to. In fact, they might want to raise rates right now. My thinking was this. What the Fed should have done is, without telling anybody, they should have just raised by a quarter point, just somewhere along the line, just like Barron's suddenly says, you know what, I think the Fed just raised rates. It should be as quiet and subtle as that. And then what would have happened is that the market could have moved higher while that transition was happening, that baton was handed over, and without realizing it, the market actually went up. And then the market could turn around and say, hey, we managed that very well. We handled it beautifully. And that would have given the market precedence for rising rates. And it does happen every once in a while. You get rising rates, and you get, when the Fed starts to raise the rates, you actually get the market going higher for a little bit longer. However, the pressure of needing to not raise the rates to demonstrate that there's more progress in the desire for loans is greater. It would have just been symbolic of being able to say, hey, don't be afraid of the rise in rates. We can do it, and now we're not going to do anything for a while. Something like that, just real subtle anyway. That's their business. All right, back to the ranch. Now, one of the things I'm looking at here is that bonds, if I don't have it here, I'll get it right now. I'd like to look at that bond yield chart. I didn't show my subscribers because, believe me, we had so many charts and so many interesting charts. Oh, the one about Boston. There was a quote that says, how come we got skyscrapers here, or something like that. And what it was from 2006. 2006. 2005 was the real estate top. 2006, they had on the drawing board a whole bunch of new buildings, big buildings, skyscraper buildings in Boston. Well, it's the same headline today. And I showed some other things about South Station. Back then, they were going to do a really big monster move for South Station here in Boston, and that was put aside. And these are all fascinating things. So now what I'm looking at, the long intraday. Oh, this is long. No, this is wrong. Wrong chart, sorry. Close the chart. Close the workspace. A workspace, yeah. No. Put this one on right here. Oh, long-term charts. That's what I had. What happened? Uh-oh. Did I get the right one? No, I think I got the wrong one. No, there it is. You see, there's the yield. Look at the yield. Look at the way it keeps making lower lows and lower highs. Even now, it's only up 4 cents at 25.08. So this is saying to me, you see the cluster formation? The one thing we've got to be careful of here is if there's an inverted rate, if there is an inverted yield. And that's all I'm looking at. So there's this cluster formation. The last time we had a cluster formation this close was actually, that wasn't even close, but it was right here. Hard to believe, but that cluster formation right at the top signaled that yields were on their way down. Look at that, right there, 54.08 back in June of 2007. And it unleashed this torrent of yields, right there, of yields that, the Japanization of our bond yields, that's what I've been talking about. Okay, so I wanted to show that chart. I wanted to show this chart right here. This is the one that says right there, let me get rid of this. There, this particular, it doesn't look good, does it? There we go. There. So look at this. This is the wood, which is iShares Global Timber and Forestry ETF. It's gone to a peak E at 56.69 and pull back sharply. It's holding okay. I think it's going to make an H pattern to come down and retest that trend line. But look at this. This is a little different. You remember the pattern I said, a rising wedge, very often, I think of Statue of Liberty holding the torch. And look what happens. It makes a little arch formation, and then it tries to retest the highs. In this case, it took out the old high, and it's gone, not the old high, the old recovery high, that is, and it's gone to leg E. So I'm looking at this and I'm saying, wow, where on earth did you get that idea that we could be in a little mini recession right now? Well, the way it came about, I think, is that I'm looking at various indices and various stocks and the rotation back and forth from the safety stocks of the defensive area, like a right there in the defensive area, like a Procter & Gamble, PG. Where did it go? Anybody home? PG, right there. PG, just a bounce. Look, A, B, C, very strong, but a bounce nevertheless. And defensive stocks, and I'm looking at the home builders, HGX, and they're getting into some kind of a toppy thing, and it looks to me like the technicals are not confirming in the daily. So I'm watching this really closely to say, hey, if this is leg B, we'd have a whole week before, or even early next week before we can actually make a D. And sometimes they are a little bit late. The home sold to Minecraft founder for $70 million. This is on CNBC. This fits in perfectly. I mean, people, thank you so much. I got a break coming up, but people have been sending me links to the sales of home prices. $70 million for a house. That's still nothing. We will find out. If there's a watch that's being sold for $2.5 million, there should be a...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So here I'm looking at the Kingdom Tower. This is from Wikipedia. Not to be confused with Kingdom Center or Mile High, Illinois. This is Kingdom Tower, and it's previously known as Mile High Tower, and also known as Mile High Tower is a skyscraper currently under construction in Jeddah, Saudi Arabia, at a preliminary cost of US $1.23 billion. It will be the centerpiece and first phase of SR $75 billion. So that's $20 billion project, a proposed development known as Kingdom City that will be located along the Red Sea on the north side of Jeddah. So this is going to be very interesting. I actually don't know. This is from a little while back. I don't know if it's still going on. But there are plans to be building mile-high buildings. Those are plans. Remember, it was Frank Lloyd Wright that came up with the concept of a mile-high building and said it could be done. Of course, in those days, it would have been almost impossible because you have to have the elevators, the air. Can you you imagine being a mile up, turning on the hot water? There are other things they could turn on as well, but let's call it the hot water, and expecting it just to come all the way up in a split second and be right there. I mean, that's, modern technology is always just something to marvel at. It's just, how do you keep a building up? Well, you use shock absorbers, massive shock absorbers. This is, what an age. What an age. And then to think that at the same time you've got people that are absolutely ruining these historic statues. I mean, where are we? Huh? Where are we? So anyway, let's get back to this. So here's the HGX, the Philadelphia Housing Sector Index. If I look at this just purely on a technical basis, you'll see the work that is being it's been trying to consolidate with slightly higher highs, slightly lower lows since it made that high back in 2013, maybe it was April or so. And then what happens is it kind of stalled, but it is using that black line. It is using the 9-period exponential moving average to really form some kind of a staircase that it can walk. And it's in leg C in the monthly chart. What does that suggest? That suggests that even though it's under the all-time high of 293.66 back in July of 2005, remember, to me, this is that move up and the way that one had to try to short all the time until finally when it turned down, you said, oh, I'm giving up. No, that was the time to be really diligent and stick to your short. That's very much like the IBB right now. That's my impression, that the biotechs have reached that point, that inflection point that says now it's going to be really tough. We might even make it. We could even make another new high. But it is just, it's running on fumes at this particular point. And this is what happened right here. Look at the way the stochastic was failing when it went to the all-time high. So now you've got a very solid, constructive move to the upside. It means that you've got tremendous support on every pullback. It's a 235 Philadelphia Housing Sector Index, HGX. And look, you've got yourself 215 as a very strong 9-period moving average support. You could even go lower. You could even go to 212 or 209-ish area on some kind of big consolidation. But in the meantime, the trend appears to be higher highs and higher lows. Now, the arch pattern, oh, look at this. Wait a minute. I did this. I can't extend it. I'll move this. Okay, here we go. Space to the right. Let's make it 22. There we are. Now, what I've got is some kind of a left side, right side time price that says we could get back to the all-time high of 23.66 sometime by March of 2016. I have to tell you something. This is going to be a fascinating... Oh, it's the end of the show. You got Larry Perseventure coming up, programs all day, and thanks for being here. And I'll be back. Don't forget, we're expecting a new high in the S&P. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.